FX Equity Builder Review. Homepage and Vendor. The homepage of FX Equity Builder is simple and clean. It does not contain a lot of information about the creator of the product or how it works. Mainly they show backtest results showing higher returns starting from 300% this year and above. In addition, there is the access information for and forward test account as well. Delivery. As owner of Equity Builder you get the Equity Builder Expert Advisor, one compiled X4 file, one library file, one application, a 4-page PDF documentation. After the completion of the order you need to send the vendor your account number and you get your Expert Advisor by mail with the account hard-coded inside. The robot you get delivered is limited to a 70-day period. You will get an unlimited version after the refund period ended. License. Equity Builder comes locked at trading account. Installation. The installation is described in a short sentence in the email of the delivery. It will not be a problem if you did install an Expert Advisor before. In addition, they provide a link to a video which shows how to install an Expert Advisor in general. How does it work? The robot enters trades based on stochastics and moving averages. It uses a martingale theory, which means that if the market runs against its trade it opens additional trades, always with increased lot size. This additional trades are made a distance of only 20 pips. This is limited to a maximum of 8 open trades. The biggest traded lot size starting with 0.01 lots using conservative settings is 0.62 lots. The maximum total open lot size is 1.79 lots. Settings. The settings are documented in the manual. There are settings to define the account type, the minimal trading size, take profit and stop loss, a risk setting and time window for trading, and an equity protection. By default the IA comes with default settings for 5-digit price quotes. Money management. The money management used at martingale. This means that in worst case the whole account will be at risk as it may open a lot of trades with increasing lot size. The risk parameter affects the initial trading size. They suggest 2 different settings, 2 for conservative/4 for aggressive setup. The initial lot size it starts with cannot be defined, it's calculated internally by a money management routine. All trades don't use any stop loss. There is a parameter offered called equity protection. With this parameter a level of drawdown can be specified at which all trades will be closed. Here an excerpt out of the manual what they recommend.
Manual exits. As stated above, we suggest you use your initiative to exit trades as shown below. If you are not comfortable with this, then we suggest you set an equity percentage setting of 50%. This may seem quite high. This has not happened this year on the risk equals 2 or 4. As this year produces approximately 40% per month, within 1 month you will have almost made this profit back.
Broker requirements. Equity Builder works with 4 and 5-digit price quotes but does not support ECN-style brokers. A broker which allows microlots is needed for accounts smaller than 50K for conservative and smaller than 25K for aggressive settings. Conclusion. An aggressive robot which either produces higher returns or whips out your account, as they state correctly in the manual. We strongly advise that you only trade with capital you are comfortably able to lose. One important information is missing for a martingale product. Which amount of money is needed to give the robot enough room to survive? We did some backtests for 2009 to check that out, trading with 1 microlot, 0.01, as a start and conservative settings. Especially for smaller accounts it seems not to be a good idea to use the 50% equity protection, as this will be hit and the next trade setup already may have not enough room left. Without equity protection for 2009 it would have worked so far starting with $1,000 United States dollar, while it would have failed using equity protection. For 2008 the situation would have been totally different. It would have whipped out the account if running with or without equity protection. If you plan to trade with such a tool, we recommend to get an account with the highest leverage available to avoid early margin calls and always run it on an account dedicated to that robot. The backtests we published have been made using the recommended 50% equity protection. For more information visit www.4xproject.com.